Hello and welcome to another update video on ADA. Yeah, the price is currently moving up still in this potential B wave that we've been tracking over the last few days. It started already on Friday. The idea was that we might see a B wave bounce over the weekend. That has progressed further. It could turn into something more bullish, of course. However, really, I don't really see much evidence for that at this point. It is possible. The local momentum remains up. But I can tell you, once we break below the last swing lows here, things are starting to break down. So, I mean, the nearest key level that needs to hold for the price to continue to climb, which it can even do in this B wave, yeah, there is still plenty of room in this B wave. The nearest key level is this last swing low that formed here around 64.1 cents. So this is the nearest key level, which means that once we break below it, we have a first indication that things are starting to break. The floor is starting to crack, but at the moment we are quite far away from that. That level is at 64 cents. We are now at 67. So we're rather moving up at the moment, as it seems, together with the stock market, which is looking quite friendly today. Below this level, we have the last swing low below at 62.2 cents, which is the next relevant level to watch. Should the first one break, then the next one below comes into focus. I think it's important to recognize, it's important to understand that at the moment, there is absolutely no evidence that we're in a full breakout to the upside. The momentum is not strong enough. It's rather typical for a B wave, but at the same time, there is no, let's say, local top yet in this B wave. So we remain focused on upside in the very short term until the price breaks below the red line. We need some kind of a local topping signal. And then the focus will shift to the C wave target to the downside, which we can then define, right, in the white count. This C wave target to the downside, we can't define it yet because the price is still quite, you know, quite far away. First of all, we have no evidence, you know, that the B wave has topped. So I need a break below the red line, and then, but also I need some kind of evidence, you could say, yeah. Need some kind of evidence that this B wave has actually topped. And then the focus can start to shift to lower prices. And then I can, with the Fibonacci extension tool, define a target for a C wave. The target at the moment, you know, if I was just going to measure it like this, wave A to the downside, wave B to the upside, the 100% extension target at the moment would point towards the 54-cent level. But again, that will change. As you can see, if the price grinds higher, this target will shift higher as well. So it's something to keep in mind, that we have to adjust this area. So I'm not going to leave it on the chart. You know it now, but it depends on where we top. Next resistances, very, very important one here, around 67.8 cents. A very common target for such a B wave bounce. Above, we've got 70.3 cents and then 71.8 cents. Really, as I said over the last few days, microstructures are rather unclear since the Friday crash. The market still looks quite unstable, in my opinion. So there is currently very limited evidence that we have a meaningful low in place. It's of course possible. I mean, I won't rule that out, yeah. But we need some impulsive price action to the upside and a break above resistance. We don't even have a break above the initial micro resistance area. Yeah, and then the focus can shift towards 82.7 cents. And that's an important one because, you know, this is the key level that needs to be broken to unlock higher prices, not only in the short term, but also in the medium term, because this is where the actual selling pressure started to come in, yeah, where selling pressure started to intensify, as you know, on the Friday, on that 10th of October, on that 10th of October, you know, crash, during the crash, this is where it really started to kick in. So we need to remain, I would say, somewhat flexible, and we need to be aware that this could simply be a B wave, and B waves are the most difficult waves to track. So watch for a rejection here, but without a break below the red line, we should not assume that we have topped. And if we then look at this support zone, 47.3 cents to 59.3 cents is Fibonacci support. This is the broader support area. Even if we come down again, it wouldn't necessarily be bearish. It just means that this potential 1-2 setup, which we're tracking, is simply extending a bit. But it has kind of low confidence, you know, this 1-2 setup. I'll keep you updated about it. So far, the market has been stuck in a range for the last week or so. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, then make sure you also follow us on X for additional updates, charts, news, and much more. I leave a link for you guys in the comment section for the X channel. Thanks so much. Bye-bye.